Welcome back, and joining me for a look at the day's markets action is Sentio Capital's Imtiaz Suliman. Thank you so much for your time, Imtiaz. It's been quite an interesting day. Of course, still lots of company results trickling in on the JSE. Let's actually start off with those, starting off with the results from Naspers and Prosus. Of course, we have seen these significant gains in the share prices. They released their interim results. We did see an uptick from revenue all the way down to the bottom line there, popping quite significantly. Of course, we did see a climb in those share prices. Is there a strong underpin here?
Hi, Zanati. Yeah, I think what we're seeing here is management executing on their strategy of trying to unlock value ex Tencent. So although Naspers and Prosus is still very much driven by Tencent, with Tencent making up 80% of its net asset value, some of the underlying core businesses, like the e-commerce portfolio, has turned profitable. So if you look at the business and drill down a bit further, iFoods, which is their food delivery business in Brazil, had a very strong period, and that is scaling very fast. So that's growing nicely. It's profitable. The classifieds business as well is also profitable. And some of the other businesses, like the payment business, while still loss-making, is starting to turn in terms of profitability, and those losses are reducing. So again, Naspers has a few things in its favor, like the share buyback program, which is like one of the largest programs around in terms of share buybacks, management trying to unlock value. They've listed a few assets like Swiggy, and they've sold some non-core assets. So again, a very much unlocked value story, which is starting to come through in the numbers.
All right. Well, let's go into more numbers. These ones coming from Alex Forbes. They did also release their half-year results today. An improvement in their financial metrics, including in the dividend. I did see after the results that share was up slightly, about 1.5%. Is this a sign of confidence for the company's growth trajectory?
Yeah, if you look at Alexander Forbes, they play in the retirement and pension fund space. They were also driven and helped by higher market levels. So the assets under management and administration was up 25% on a year-on-year basis, and that helps with fee income. Operating profit up 12%. They do generate a lot of cash, and they do pay that cash back to investors in the form of dividends as well as special dividends. So dividends was up in this period. They've got a strong liquidity buffer. And, although we did have some two-pot withdrawals coming through, their assets under management still grow on top of that, and there's a consolidator in that market.
All right. We did get a 10-month voluntary trading update from Standard Bank. They actually spoke about factors that are diluting their earnings, and so they're posting low to mid single-digit growth in their headline earnings. I did see that share price slumping over 2% there. Is there a question about, or is the growth momentum at this point maybe just slowing down?
I think it's a bit early for that, although we did see some movements in the currency, and especially around Africa, which did affect Standard Bank's underlying reported results, because they have a large component of earnings coming from outside of South Africa. So this could reverse in the next period, depending on what currencies do. But if you look at it from an underlying basis, they did guide for a bit of slower growth. But going forward, I think that's when you will see some of the activity pick up. We've had, interest rate cuts come through. We've had inflation starting to decrease. And we've had the two-pot withdrawal system being active. So, there's signs of increased consumer activity. And I think on the back of that, one could expect higher lending growth going forward, as well as some impairments which will be lower. So I think overall pretty steady, but a bit on the softer side. But if I look 12 months out, I think the results should be better than these.
Yeah, all right. Well, another set of results coming from Nampak with the annual results. They did post tepid growth in revenue, but we did see them swinging from a headline loss per share to headline earnings per share. What's been your take on Nampak's journey of recovery?
Yeah, it's been a turnaround story. They grappling with high debt levels, which they've brought under control, although they still have like 4.4 billion rand of debt on the balance sheet, and some of the underlying operations have started to get better. We've seen the operation in South Africa and some of the regions in Africa also starting to turn. And I think the big kicker here was the impairment reversals that came through in this period, whereas in the last period they had quite a bit of impairments come through, and this period they wrote back some of that impairments because the assets are performing better. So it's still a company that's in a turnaround phase, but things are starting to look better than they were last year this time.
All right. Well, let's get into your stock pick for today, Imtiaz. What will it be?
Yeah, I'm going with Richmond. It's one that I've picked before. And if you look at Richmond, there's essentially two divisions to it. The one is the jewelry business, and the other one is the specialist watchmaking division. The jewelry business is a bit more defensive. It has a higher margin to it as well, and that's been a consolidator in a very fragmented market. So they've been taking market share from independent jewelers, and their strong brands like Cartier, Van Cleef resonates very well with the consumer looking for a higher branded jewelry purchase. So I think overall, their results were a bit soft the last time around. They have a very strong fortress balance sheet with lots of cash. They do pay out dividends and have been increasing dividends, and those returns will get better from here, provided we don't have a global slowdown coming through.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Imtiaz. That was Imtiaz Suliman from Sentio Capital.